Hello, everybody, and welcome back to the Dash Trader Newsroom. Back to school and back to work. All eyes are on the jobs number tomorrow. And as always, I'm Michael DeGioia, Director of Educational Services here at Dash Trader. And I'm joined by my co-host, Jill Molandrino, Global Markets Reporter from Nasdaq. Jill, how you doing?
Good, doing well. Good to see you.
Good to see you too. Good to be back at work. Not like we've had any slowdown this summer. It's been a pretty hectic summer. But today we had the ADP report, and the ADP report showed some slowing labor market data, which basically the U.S. economy added just 54,000 new jobs in August. Traders and investors are really keeping their eyes on the big number tomorrow, which is the non-farm payroll number. But it seems like the current market interpretation of how this data is coming out is that a bad number might mean a greater chance of a rate cut. We've seen this happen, this kind of inversion happen a couple of times before. What are your thoughts on this?
It's interesting with the jobs number, and we've covered this over the past couple weeks on my show. And the question is, are companies not hiring because there's an economic reason, or could it be because of what we're seeing with AI and the tech trends, and for management teams being able to understand really what the impact is to their workforce? Are they hiring for the right positions, right? So it might not be that they're cutting back on hiring for budget or economic reasons, but for them to better understand the types of positions that they're going to need to acquire talent for, which I think is interesting. And I think that like the latter of that could possibly be the case, right? I mean, we even asked this question where what's the ROI with these companies, these AI companies and so forth. I think we've even moved beyond that. We get what companies have exposure to the AI theme. We get it. It's the Broadcoms, the Microsoft, Amazon's, NVIDIA, of course, but all these other sectors, all these other companies that are making investments into that kind of technology, never mind the mag 4 or 5 names. What does ROI look like on companies making that investment, right? So I think it's still too early to tell. I don't think there's enough data or time behind that yet, but I also think that could be reflective of them understanding what kind of jobs they need to make acquisitions for.
I mean, that makes a lot of sense. I mean, AI has really shifted the way that, pretty much everybody works if you're in this kind of digital space. So, it takes time for companies to adjust and see how they're going to, kind of retool in a sense, and certainly the kinds of people that they want to hire. Um, Jumping right in, I mean, this jobs number is contrary to the second quarter growth numbers, which, showed a strong rebound in the U.S. economy in the second quarter. We had a 3.3% growth, which is very robust growth, especially, that was better than the estimates of 3% growth, and certainly better than the contraction of 0.5% that we saw in the first quarter. The Fed traders and investors, are all watching growth figures as well. What are your thoughts on growth? And also, we've seen some recent legal challenges to the Trump tariffs. Do you think these are temporary, or do you think that this is an actual real obstacle to the tariffs and the change of the overall economy?
Well, it's interesting. First, let's understand why it was struck down, right? So the court decided that it didn't give that Congress does not give the president wide-ranging authority to impose tariffs, right? And like the kind that Trump has imposed in the amount of executive orders that he's put forth. It also invalidates the tariffs that Trump has imposed on China, Canada, Mexico. So that is what the court decided. These wouldn't take effect until October 14th. That's the decision. The administration is going back, saying that it should be immediately sent to the Supreme Court for further review. And they're saying that the stakes could be any higher, that they are using tariffs as a way to promote peace. They think it's bringing along unprecedented economic prosperity. And that the denial of a tariff authority would expose the nation to retaliation without effective defenses. So it's really more of what's happening from a negotiating perspective that I think the administration has an issue with it. From their perspective, rightfully so. I think this is kind of a strategy that they were banking on. Um, I think what could be a challenge to that is the issue of the president's authority. Now, it's under the International Economic Emergency Powers Act in 1977. This is the act that he used to impose that baseline tariff. Um, um, uh, these are the tariffs that he's using to negotiate with. But from my understanding, this is the first time that an administration has used that particular law to impose tariffs. So as I understand it, there's really no precedent or case law to derive a decision from, right? If I'm just trying to, I'm trying to speak at the highest level, that the fact is this is unprecedented in terms of a president enacting his power based on this act. So there's really nothing to benchmark it to. Through the administration's perspective, this could have legs and be impactful, to remove that negotiating tool. So I think from the market's perspective, earnings in the second quarter were quite good. And teams are, management teams are able to work through this uncertainty. I think when we get into the next quarter reporting cycle, we might have a little bit more insight into that. But as far as it's been, Mike, and if I'm interpreting the numbers correctly, whether it's one time or there hasn't had an impact or we haven't seen it yet, I mean, the impact hasn't really been felt or expressed just yet.
Yeah, and I mean, basically, the growth figures was, largely buoyed by the consumer. I mean, it was the strength of the consumer in the second quarter that really, helped bounce back the economy. As far as the tariffs, I mean, yeah, there hasn't really been a market impact. It seems like the market's waiting to see how this plays out legally.
Yeah,
So,
I think something that is important to note, though, that the proportion of the tech spend that's being added to the economy is something that is not consumer related, and that is one area that I would definitely keep an eye on, because depend. The numbers could look good, but where is the spend coming from, right? So that's just one thing to be cautious of. Um, and I thought that's an interesting data point. I also think when it
yeah.
comes to the consumer, uh, how are they spending? What type of capital are they accessing to spend, right? Are they leaning really heavily on BNPL? Are credit cards getting maxed out? We know savings from COVID have essentially been evaporated. So I think how they're spending and the tools that they're leveraging to spend is also something that, the data that we, the economic data that the Fed takes a look at doesn't necessarily incorporate that. It's a little bit more broad based than that. But I think, for other data resources, it's just something to keep an eye on too.
Absolutely, a great thing to keep an eye on. Obviously, you and I have been on top of this, the gold and silver trade, pretty much for a couple of years now. And certainly, and certainly you and I have talked a lot about crypto, but at least I've recently pointed out in the chart section that gold was kind of forming a bull pennant type formation. And then finally, this last week, we finally saw gold and silver break out to record highs. Now, on the crypto side, crypto has been pulling back a little bit lately. But the fundamentals, at least from gold and silver, from a repositioning standpoint, against the US dollar, we saw this kind of maneuvering with these BRIC countries. Do you think that the gold and silver trend has legs? Like, this trend will continue from your perspective, and what you see going on with the from a global repositioning out of the dollar point of view?
Well, I think the case for silver, the industrial applications that it has. I did not.
Mm-hmm.
I think we spoke about it the last time we were on together, but over 10,000 applications for industrial applications are derived from silver. I did not realize how high that number was. So I
Mm-hmm.
think the move in silver could also be attributed to other fundamentals that we don't typically look at.
Mm-hmm.
I am not a technician by any
Mhm.
stretch, but the top chart there looks pretty impressive to me, if
Mhm.
I'm interpreting that correctly. And I think, in this kind of environment, where there is some uncertainty, and really, again, everything is being driven by the industrial demand for these types of metals. I mean, the case is still there.
Mhm. And in crypto, we've seen this, we've had a tremendous run in crypto. I mean, obviously this was, on the positive infrastructure legislation that's being passed through the US Congress. There is I mean, to me, the pullback in crypto is just kind of a healthy, a healthy pullback after a substantial move. I mean, the percentage gains in crypto have been huge. And, now it just seems like it's kind of adjusting. But it's interesting that we have both gold and digital gold, doing phenomenally well so far this year. And certainly, they're in different stages of their trend. What are your views on crypto overall? I mean, is there anything that you've heard in the last couple of weeks from the
What I think
legislation front?
what I think is interesting with the crypto space is we're starting to see broadening out in it as the use cases are understood,
Hmm.
more effectively, right? So understanding, why Ethereum and other types of blockchains have had the run that they had, because that is the underlying infrastructure, right? And the fundamentals of one versus the other are more broadly understood. Mike, I happen to agree with you that I don't know if seasonality is the right word. I wouldn't compare the seasonal moves that we see in equities to apples to apples with crypto. But to your point, it could be there was a lot of money made. There was an incredible run. It's not like it crashed below 100 or anything like that. And there's certainly rotation that's going on there. And
Yeah.
I mean, if anything, I would take it as an opportunity to continue to add. Again, I have been a hodler since day one of participating in these investments, and some years were really ugly and some years are really good, and it's kind of as the asset class has matured, it's found its balance, if you will, and its ranges. But I don't think this is anything in terms of a correction, if you will.
Yeah, no, I see it as a pullback, and I've noticed that the typical rotational move, which is that Bitcoin moves first, then the Ethereum and the ERC20 coins go second, and then finally, once the I hate to use this term, but this is the term that the crypto traders use, shit coins start to go.
Hmm.
Then after that, you can expect once the shit coins have a run, then you can expect the pullback, and then it kind of consolidates for a while, and then the run starts over again. Initially in Bitcoin and some of the quality, cryptocurrencies, and then certainly followed by Ethereum and the ERC20 tokens, which is basically the primary token that's built on top of Ethereum. I mean, it seems like, that's the most prolific token out there is the ERC20 token.
Yeah.
So,
I mean, you're continuing to see the institutional flow into these investments. You're starting to see, I mean, the products ever since that we got more regulation around it, the funding rounds, the products that have been derived off the asset class. There is consumer demand, and not only just for crypto in general. I just think the demand for alternative investments and alternative assets is, I don't want to say peak, because it does feel a little bit frothy in places, but it's not as if the institutions are going to turn their back on these investments like tomorrow, right?
yeah.
So I also think that, again, it's a young space, and you're trying to figure out what trading patterns, what use cases, the fundamentals behind it, as it continues to mature. I don't think we'll see those volatile periods that we did during the crypto winters. I think it's matured beyond that.
Hmm.
But look, Mike, there's what, 40% of the Russell 2000 not profitable, right?
Yeah.
So look, there, just because you're in a different asset class does, there's it, there's going to be outliers in every asset class, or not, right?
Yeah.
So
And, and, and
I don't invest in the shit coins like you say. That's not my lane. But I don't
mhm.
think we're going to see, from an institutional perspective, any massive reversal of their investments.
One place we've really seen an excellent use case is the Ripple XRP kind of financial funds transfer space, which is, obviously gone through a massive move forward in these last couple of years from basically being blocked in the United States to getting its legal problems resolved to possible adaptation. And it's not just Ripple, there's others as well that kind of have similar use cases. So those have really, made a tremendous run. But
Yeah.
before I say goodbye, Jill, just want to bring up that we
Oh,
are
yeah.
coming. Yeah, it's once again the year we've passed another year if we're doing yet another number one best trader competition. So we're getting ready for the October competition. So stay tuned for registration. And Jill, I look forward to talking to you about the competitors once the competition gets started in October. So it's going to be interesting to see who will be this year's number one best trader.
Mike, it's
And
got to be over almost a decade because I look at the tower shots, the one where it's all block letter on the bottom. That rebranding it's got to be almost a decade
it's
ago. So
been,
this has been
I
going
think
on
it's a
for a long
solid
time.
6 to 7 years at least. I mean, we're getting
Yeah,
close. We're getting close.
yeah,
But
definitely
I
getting
don't think
close.
it's a decade yet. But thank you so much for all of your
You got
help
it.
as always with the number one best trader competition. And until next time, Jill,
All right. See you
thank
guys.
you.
Take care.
Bye bye now.
See
Ciao.
ya.
All right, everybody, let's jump to the market analysis. All right, so here's the QQQ today. I mean, it's been pretty much straight shot up. So interesting on the QQQ is that we've had a nice break back above the moving averages, but the we just got a down arrow about a couple of days back on the moving averages, which means that there is a moving average crossover. We got to see if this move to the upside is sustained. We're getting a lot of crisscrossing moving averages on the Nasdaq. On the SPY, I mean, we have kind of broken back to new high territory or very near new high territory. We've had a really strong, what would be called a bullish belt hold bar. I didn't make these names up myself. Anyway, this is a bullish belt hold bar. And possibly, this is a very strong move to the upside. Let's take a look at GOOG. Google gapping up, breaking higher. So Google really making a strong move. I mean, this is probably the best move we've seen in Google and I mean quite some time. So Google really leading the markets higher here. Microsoft giving back and gap fading almost the entire gap up from its really excellent earnings report. So it looks like Microsoft getting some profit taking here. Apple has had a tremendous run to the upside, and it's really pressing the markets higher. Really nice continuation pattern on Apple. Apple had been a lagger for a really long time. Tesla looking like it's consolidating with kind of a cup and handle formation. So I would definitely keep an eye on Tesla, as the weekly on Tesla is kind of a weekly cup and handle. And let's see what else we got. We got NFLX, Netflix, making a strong move up as well. Again, a similar kind of, what I would call is a bullish W formation. We're just about crossing the midpoint of the midsection of the W, which is a very bullish pattern. So it does look like we have some bullish price action. Incidentally, September does tend to be one of the most bearish months of the year. So definitely prudence, being a little prudent and cautious and profit taking is always a good move on any of these upward moves. And certainly, we already pointed this out. Gold breaking out finally. I'm a very big gold bug. SLV, silver also at all-time highs. Like Jill mentioned, the industrial use of silver is huge. GBTC, which is the Bitcoin ETF, doing well, but certainly in a pullback mode. Just want to point out that these, lots going on for sure, and just be very, very aware of, these that this is probably a good time to be mindful of all of these changes. Anyway, trade well, be cautious, stay up to date with all things DAS by signing up to our monthly newsletter and email. Simply fill out the form at the bottom of our webpage at www.dastrader.com. Subscribe to our YouTube channel on Dash Trader TV and our newsroom reminders. Follow us on social media on LinkedIn, Twitter, Facebook, and Instagram. And stay tuned for the upcoming registration for the #1 Best Trader competition. Trade well, everybody, and until next time.